What I'm going to share today is something that has not been covered by other day trader, as far as I know. I believe that will change the way how you view Bitcoin price in the future and how to have a bias in the direction in any point of time. So, let's move on. The agenda for today will be to recap of my previous stream of how big boys manipulation works in terms of the settlements and stuff like this, and how this Bitcoin price in the next few months, right? The prediction as well as the Bitcoin crypto market equities. Finally, I will end off with some Q&As. Any question that are being asked, I will answer to the best of my knowledge. So for the benefit of those who didn't watch my previous stream, right, I will do a quick recap of the key points relating to the big boys manipulation. Okay? So the first thing is we notice a very interesting phenomenon. That is, Bitcoin price tends to dip most of the time prior to the futures expiration date. It is so coincidental to the extent that a couple of years ago, arcane research determined that it's almost statistically impossible that the price of Bitcoin randomly dips towards the end of future settlements. So there is a link between the Bitcoin price and the futures contract settlements date. So the interesting thing is, the more bullish the price of Bitcoin leading to the settlements date, the harder the fall. So the Bank of America says it only takes 93 million to push the price of Bitcoin down by 1%. So let's go to the chart for easy understanding of what's going on. So how it works is, when they go long on actual Bitcoin on the spot market, right, they will hedge their Bitcoin holdings by selling futures contract that short the market. So there was this darker and sinister move called the banging the close, which is they will short big position prior to the closing. So as you can see from the chart over here, all the yellow lines that you can see over here, they are the futures expiration date. So the more recent one is the today, which is 25th June, which is the expiration of the quarterly and monthly contract. The previous are the 27th May, 30th April. So what it means is, let's say they buy, let's say for the case of during the end of March period, after the quarterly closing, what happened is big boys will tend to buy spot of Bitcoin, which means holding actual Bitcoin at probably at 51,000 at this point of time. And when price were to hit all-time high, they will start engaging in selling futures contract. Okay, futures contract is an obligation between a buyer and a seller, okay, with a future expiration date with agreed price. So let's say the big boys agree to sell futures at this price, which means that they agree to sell Bitcoin at the price of 63,000 when it expires on 30th of April. Okay, they have the incentive for price to go down because they have the right to sell Bitcoin at the price of 63,000 regardless of what Bitcoin price is at the expiration date. So meaning to say, depending on how they settle the futures, be it offsetting, I will go into the details of how the big boys settle the futures later. They will earn the difference. So exactly how does it works? What are the details? To answer that, let's talk about future settlements, how it works first. Typically, there are three options a trader can do to settle a future contract: offsetting, liquidating, roll over, as well as take or make a delivery. So the first step of offsetting is the simplest and the most common way. So through this method, right, a trader could realize all the profit and gains associated with the position without any physical delivery or cash delivery. So they just make an equal position to offset the trade. So for example, if someone were to short crude oil contract where it is expired in September, just before it expire, they just need to open another long contract that expires in September. In that way, they'll cancel off each other. So profit and loss will be realized on the spot. I go on the Q&A towards the end. Let me go through everything so that it won't affect my chain of thoughts. Okay? Thanks CISG19876 to be first, and Tom. And thanks for the question. I will address it later. So the next one will be rollover. Okay, rollover. This can be done anytime before the expiration. However, right, the trader will risk lower liquidity as the expiration near. So typically, right, let's say there's this trader that long 4 contracts of ES. ES is a mini contract for S&P. So what happened is he just need to open exactly the same opposite position of 4 short position contract of the ES. It will cancel, and at the same time, alright, at the same time simultaneously they buy a December long contract. In that way, it will be rolled over. Okay, and the last but not least is the delivery. So at the expiry, the one who short the contract is obligated to deliver the quoted asset, be it the corn, be it the wheat, crude oil, S&P, okay? Delivered, the one who short it is obligated to deliver the asset to the one who long, alright? Based on the agreed price. Okay, sometimes it will be done by cash delivery. Bear this in mind. So, talking about this, how does this relate back to Bitcoin? How does this relate to big boys manipulation and Bitcoin's futures contract expiration? For this, please look at the terms and conditions of CME Group. You know, for CME Group is, let's be more specific. Look at here. Final settlement procedures. Delivery is by cash settlements by reference to the final settlement price, equal to CME CF big price. Okay, in short, let me explain this in words. If you look at the chart over here, let's say, using my original example of big boys, okay, big boys buying spots over here, right? And when price action were to hit all-time high, they'll start engaging in selling futures contract. Any time when price reach here, they start compiling more futures contract over here. So once they have enough of the futures sell position contract, right, they will start shorting the spot position. So whatever they're holding previously over here, they'll start to short it. Bank of America recently already said that it only takes 93 million USD, right, to artificially push down Bitcoin price by 1%. So it's not that difficult to push down this amount. And in the process of pushing down, they has already accumulated enough profit, and they will get another round of profits over here. Still remember I mentioned about to settle the futures contract, right? There are 3 ways. The first way, offsetting, is the most common way that the big boys has been doing. And that is the reason why, you notice something? For the April expiration is 30th of April, futures expiration date. So what happened is, when they short it, when they decided to artificial sell the spot forex, which means the actual spot Bitcoin, to push down the price, they have already compiled enough futures contract to say that maybe your expiration to be at on 30th April, we will agree to sell it at $60,000, $63,000. They compile a lot of contracts all over this pricing. So what it means is if price action were to dip below their strike price, they will accumulate this much of profit. And that is the reason why sometimes it's not, you don't need to wait until the expiration date. Just before the expiration date, which is this date over here, which is around 26th of April, this is the lowest point. Because at this juncture, they would have done this. Offsetting, just like how the crew contract, they will do an equal and opposite position, which means they will engage in the long contract of Bitcoin to close out whatever short contract they have. The differential is the big profit. That is how it works. And even if certain big boys didn't close out at the expiration at this point of time, they will still earn a decent amount of profit. So that is how it works. If you notice, right, for the past few months, look at this. Expiration, near expiration, this. All-time high, near expiration, this amount. All-time high, near expiration, this amount. Here is a short, I call this a relief rally. Expiration, it's like this. What about the most recent case? So it doesn't take a genius to know that they are doing it. It's just that most of us will turn a blind eye to say, oh, it's just too coincidental. Arcane research already stated very clearly that it's statistically impossible, alright, for price action to repeat so many times like this. The recent case, near expiration, 2 days, 3 days below expiration, that will be a 30% retracement over here. Okay, now comes the important part over here. Bitcoin has already dipped 50%, around 50% from all-time high, right? Already dipped 54% from all-time high. So what is going to happen next? In trading, right, and analysis and doing a prediction, please do not use gut feel. Don't listen to rumors. And don't even listen to me per se, alright? Always do your own self-verification. Back up with a proven back-tested strategy. That's how you add value and improve your own life, be it in trading and other things in general. Sometimes I will hear random complaints from people that they are losing monies. They bust their account. They don't understand why when they buy Bitcoin they keep losing money, right? Or they keep losing when they do those kind of breakout strategy, or they blame those people. They blame those people who give them those tips and rumors. Let me digress a little because I believe this is quite important. There are two kinds of people. There are some people where they lose money, where they fail. When they fail, they blame everyone except themselves. They refuse to review and look back at themselves, and they don't review their trades. They don't care. They say, it's not my fault. It is the government fault. It is the CEO fault, or it is Smurf Trading fault who give me content that is not value adding enough. Okay, they blame anyone except themselves. They give excuses for themselves. Well, it's because I don't understand finance. I don't know what's the rule because I have bad luck. They bitch about everything all the time. And sure, if you keep complaining and giving excuses, you may feel better temporarily. But when you keep doing that, you keep going around in circles and you don't grow and move on. When you blame someone, you blame something, that means that they are controlling your life. And if you allow other people to control your life, you can't control or change your life. So you must think in another mindset that I create my own success, I create my own failure, I create my own happiness. So the moment when you realize this, right, you will start to do back testing. You will start to do your own self-verification, alright, to change your results, change your strategy, and changing your actions. So looking at this this chart, right, which is Bitcoin chart over here, in making prediction of what it's going to do next, there's two things to bear in mind: whether you want to do it for short term or long term. You know, for long term, the main thing is looking at the stage of this current bull run. You know, we are at this stage, which is the fourth bull run. As and when there's a halving, they will go up. This is genesis of the cryptocurrency, right? It push up. After halving, it push up again. After halving, it push up again. It's always the case. Pattern tend to repeat itself in a certain natural tendency. This is how pattern works. And when the data point accumulates more than 8 times in math, in terms of logarithmic regression, if the data point accumulate more than 8 times, it becomes a very credible data. And for the bottom band over here, it accumulated more than 100 data points over here. That is the reason why we can say by 95 or 99 to 95 above certainty that this bottom regression band is very credible. It's just about the top logarithmic regression band. Because for logarithmic regression band, right, the reason why until now there's a lot of prediction how it goes is because for the top regression band, there are only 3 data points. In terms of typical rule for regression band, you need 8 data points for it to be very, very accurate going forward. So that's the reason why there's still a lot of hypotheses of where it's going to go. But to me, 3 data points is more than enough for us to give a 70% assurance of where price action were to go. So even if we are conservative, based on natural tendency of how price action were to go, typically the crypto market cap should reach near 10 trillion. Okay, let's discount it a bit. Let's say it reached 7 trillion. Where are we now? You know, for the Bitcoin market over here, we are only at 1.32 trillion market cap. We are so far away from the peak of the retreat of the ideal target of 10 trillion, but let's put it at 7 trillion. Personally, I will be very conservative. Once market cap will reach 7 trillion for the whole crypto market, I will start to exit out my position, which is 70% off discount from the actual extrapolation of this. Okay, so which means in a bigger scheme of things over here, as long as for long term, as long as we have yet to accumulate at least 7 trillion, this is point number 1, we have yet to reach the top of the regression band. Okay, the top of the regression band over here. This peak cycle has not ended. We are in the midst of the 4th bull cycle. This is the 3rd bull cycle. This is the 2nd bull cycle. This is the 1st bull cycle. We are in the midst of the 4th bull cycle. It's just that this bull cycle, right, is a bit different because there's 2 peaks that is similar to what happened in the 2nd bull cycle over here. The 1st peak, 2nd peak. And if you look at how far it retraced, right, for the 2nd bull cycle, you notice that similarly, but this is a bit different because it's the 2nd bull cycle when crypto market is not as mature as now. Back then, it retraced nearly 76% when it is in the midst of a bull run. This time round, it only retraced 50%. And some of you might argue, if that were to repeat, isn't that we will face another 20+% of dip? Let me tell you this. This is different right now because the maturity of crypto market is very different back now as compared to back in 2013. 2013, during the 2nd bull run, many people don't understand about crypto market. In fact, there are surveys out there back then whereby people think that cryptocurrency is a scam. It's totally very different right now. But with the inclusion of the big boys, inclusion of institution hedge fund that is buying into the crypto market, it has set the floor for the low of crypto market. It won't be an immature asset that will just drop crazily to nearly 70 or 80% in the midst of bull run. So to me, there's very high tendency that there would be no further drop. Even if there is, how I'm going to trade this for long term, just listen out. I will do something like this. You know, for investing for Bitcoin, there is a short-term manner and a long-term. Short-term is about swing trading with a stop loss, okay? With a stop loss, which means that's the maximum I lose. Once it hit that price level, I will exit out from the trade. But there is another way of trading, which is the long-term method, which you don't set a stop loss at all. Okay, so there will be no stop loss. So whatever you do, right, it will just be, I will never be stopped up. Ultimately, we will reach the goal regardless of how it plays out. So long-term method, don't put a stop loss. And the fact that we have already reached certain technical level, you can buy and hold it until we reach at least the top of the regression band, or we were to hit at least the 7 trillion global crypto market cap. So that is a way of trading for long term. But the thing is, some people might question me, are you sure you don't put a stop loss for crypto market? You know, for those people who ask me this question, right, goes to show that you don't understand the fundamental of Bitcoin. You don't understand. Okay, I think it's important for me to talk about another thing over here. Why don't we put a stop loss? So, let me ask you this. Is there a chance that gold and silver will crash to zero value and never go back up again? The answer is no, right? As I already mentioned many times, right? Why gold is a standard of money since Mesopotamia and ancient Egypt, right? It's because gold, right, is the standard of money. Gold is finite. Alright, it's finite. It's the most stable metal, as well as it takes a lot of resources to mine it. So similarly, Bitcoin operates in the same way. It's scarce in the fact that 21 million is the maximum amount that to be mined. It's one of the most stable cryptocurrency out there. Okay, whereby it's most decentralized. It's well protected by the sheer numbers of hash that's over the blockchain. And it will take a lot of resources just to mine a bit of Bitcoin. So it operates in the same way, as I already mentioned many times. So I think it's very important for me to explain why we don't set a stop loss for Bitcoin in the event of doing a long-term trade. Because let me talk about the fundamentals of crypto so that you will have understanding going forward. You know, for fundamental of Bitcoin or cryptocurrency in general, some of you will remember that I mentioned before, cryptocurrency, the value, right, is based on three main things: the utility, the number of people believing in the utility, as well as the scarcity of the utility. You know, now there are over 10,000 cryptocurrencies where each of them has its own purpose or use case that's meant to give it value. So in short, right, cryptocurrency fall in 8 main categories. Okay, store value will be something like Bitcoin, Nano, Litecoin. Smart contracts will be something like Ethereum, Cardano, EOS, IOTA, Thrones, DeFi. Payments will be like Ripple, XRP, Bitcoin Cash, Terra, Dash, Zcash. Privacy will be like Monero, Dash, Zcash. Exchange tokens will be something like Binance Coin, Uniswap. Cross-chain will be like Cosmos and Rent. Oracle will be Chainlink, and the band API3 band protocol, and finally shitcoins. Shitcoins will be something like Dogecoin, Shiba Inu, and recently there's a shitcoin called Calm Rocket. What the fuck is that? But anyway, so that is by and large the 8 different categories of cryptocurrency. But if we were to talk about stock value currency, which is Bitcoin, as what the name suggests, stock value currency are designed to hold or even increase their purchasing power over time. So this typically translates to a gradual increase in price over time. However, price and purchasing power are two very different things. Every year, regular currency lose between 2 to 3% of their purchasing power. This is because governments around the world are constantly printing monies to stimulate the economic growth. This means that if you were to buy a stock that went up 2 to 3% last year, the purchasing power of that stock didn't actually change, even though its dollar value has increased. So the more money the government prints, the more it loses its purchasing power. So this is big part of why cryptocurrency were invented in the first place. You know, Bitcoin were created in 2009 as a response to 2008 financial crisis, specifically the money printing by government that follows in its wake. So most commodities are mean reverting. So as their supply will change according to their prices. For example, if a farmer notices corn is generating more profits per hectare of land than sugar, he will naturally use the plot of land to farm for more corn. So this creates more excess supply for corn, which inevitably lower its prices in the long run. So, but what happens if supply cannot increase that much even when demand for the commodities is high? That is about Bitcoin. Bitcoin, not only Bitcoin, gold. A very good example is gold. So gold has been a good stock value because it is very difficult to increase the supply even when demand is high. Prices are high. So it has a stock to flow model of 62. It means it will take about 62 years, right? 62 years of production to get back the current gold stock. High SF commodities make the best money in a function of stock value. And that's the reason why Bitcoin is very fundamentally strong. It has the exact characteristic of gold. On August 26th of August, 27th of August 2010, Satoshi said that as a thought experiment, imagine there was a base metal as scarce as gold, but with the following properties: boring grey in color, not a good conductor of electricity, not particularly strong, but not ductile or easily malleable either, not useful for any practical or ornamental purpose, and one special magic property: it can be transported over a communication channel. So this is the whole basis of why Satoshi buy this. Bitcoin money supply is perfectly inelastic. So miners will mine the same amount of Bitcoin every day, even the price are high. There's no supply adjustment when Bitcoin prices are high. So I believe I have proved my point of why, in terms of long-term investment for Bitcoin currency, there is no need to set a stop loss for Bitcoin. Okay? Just like gold, there's no way that it will dip with no recovery. Hence, for long-term investing for Bitcoin, you should not put a stop loss for Bitcoin. And for the take profit, you just need to take profit when it were to reach near the regression band as mentioned, or when crypto market were to hit 7 trillion market cap. So that is two factors. Alright, either one, when it's fulfilled, you can start exiting your Bitcoin currency. Okay, now it's a bit interesting right now. This is not giving me much value, right? So if that's the case, in order to make a better prediction, what should I do? Okay, what should I do? The thing is, in making decision of or prediction of how Bitcoin price were to react in the next few weeks, right? We'll look at the current context of Bitcoin and find in the past few years back, is there a similar cases? So we must know for a fact that currently we are at a era where there will be Bitcoin manipulation. That's factor number one. Factor number two is we are in the midst of a Bitcoin fourth bull run, right? It is not completed. This is factor number two. So with these two factors in mind, we look back in time. Is there a similar cases that we can fine tune, whereby there is market manipulation and in the midst of a second bull run? You notice that we couldn't find any example like this. Because the Bitcoin futures contract manipulation was only introduced in January 2018. Okay? So meaning to say, right, prior to this, the only example that we have over here, right, the closest example you can get is actually 2013, what happened during that time, and use that price action to relate to how price action would react for 2021. But back then, it's not really an apple-to-apple comparison, because back then in 2013, there is no involvement of big boys manipulation to push down the price with the incentive of the futures contract, because futures contract was only introduced in 2018. So how are we going to do this is, there's another way, will be to analyze all the big boys bull run and come out with an extrapolation like this. Okay, so if you notice, right, we are in our fourth crypto bull run. If you look closely over here, this is the first bull run. After halving, second bull run. After halving, third bull run. After halving, fourth and current bull run. This is our fourth crypto bull run. So the closest that we can get in terms of extrapolation of how Bitcoin price would move is to use the return of investment, the ROI of the first, second crypto bull run, and come out with patterns, because pattern tend to repeat itself. Okay, pattern tends to repeat itself, and data points, as long as there's more than 8 data points that's being then plotted on a logarithmic regression curve, right, you can come out with a 80 to 90% as certainty that that trend will repeat itself. That is how nature works. So meaning to say, if you notice, right, this is the first crypto bull run. I plug it to the bottom of the current bull run and we see what results are we getting. And this is the blue color is the second bull run. The yellow is the third bull run. And we notice that the ROI, which means is the return of investment, has always been diminishing. So meaning to say, I won't be surprised we will have something like this. Go up, go up, go up, hit the peak, then go down. I won't be surprised if price action will be do something like this. Okay? That is the most probable outcome if, let's say, you view patterns, diminishing returns of first, second, third, fourth bull run, the fact that the top of the logarithmic regression curve has yet to be reached, and the fact that crypto market has yet to reach at least the 7 trillion market cap at all, we will at least experience some kind of movement. But the very immediate movement over here, no one will be very 100% sure that, okay, this is the bottom of this bull cycle and we will experience this. No one can do this crazy ass prediction over here. That's the reason why for long term, you don't set a stop loss, because ultimately, whatever it does over here, my estimation, right, let's say based on, okay, if I were to really go give a prediction, I would say, based on extrapolation of the diminishing returns, it will be something like around next year, March. That will be the peak. Next year, March would be coincide with the fourth bull run cycle. Around next year, March, plus minus 2 months. Okay? Could be earlier, could be later. Okay? Because that is how market cycle works. What about short term? Some might be asking me, what about short term crypto? How are we going to trade short term if let's say we want to capitalize on short term game? For that case, right, then you have to use some kind of technicals already. For short term, you always need to set a realistic stop loss. Let's say I were to buy right now. The idea of buying right now is we have to come up with a realistic stop loss. The realistic stop loss is actually an area whereby once it's being breached, the next level of interest will be much lower. That's the reason why if I were to enter Bitcoin right now, my stop loss, right? Let me carry on all this. My stop loss will be somewhere at 27,500. If I were to buy Bitcoin right now, my stop loss will be around 27,500. Okay? Because we are using these technicals, right, as a reference point that it will be my final line of support. And the fact that we are at the bottom band of the regression curve over here, that will be acting as the second confluence kind of bounce to bounce the price back up again. So with these two in line, if I were to trade short term, swing trade, I will enter right now because it also satisfied the criteria that big boys manipulation has just ended. So which means you see today there's a very strong dip of 8%, right? It's because today was the expiry of the quarterly and monthly and weekly, we call it the triple witching futures contract. So as I already mentioned, as and when there is the expiration of the contract, right, what the big boys will want to do is they need to have a favorable price between their futures contract and the expiration contract and the expiration price. So with this difference, right, they will capitalize on the gains. So so that's why I'm not too surprised that there was a crazy dip today. But after today, I will buy for short if I want to invest in short term. But personally, I won't be buying because I already have enough of Bitcoin holdings. Okay, I already have a lot in my personal account as well as eToro, and any additional investment in eToro will jeopardize my risk score as a popular investor. That's the reason why I couldn't engage in Bitcoin anymore. So for those of you out there, you can just do a swing trade like this, 27,500, add some buffer if you want. Take profit, right, potentially will be once it hit at least this high, what the hell, at least this high over here. So once it hit, personally, once it hit around 46,000 over here, 46,000 is a very important structure that probably you can decide to take out some profits because they might experience another kind of crazy ass retracement, potentially in a worst scenario of things. It could even do another dip to break the all-time low before it go up again. That's the reason why for short term, you always need to put a realistic stop loss and realistic take profit, because there's a chance that this will happen. But for long term, I don't give a shit, because for long term, whatever Bitcoin were to do in between here, do this, there's no stop loss. Ultimately, it reach here, I take my profit. So that won't concern me. So you have to bear in mind if you're doing short term or long term. So for short term, I recommend enter now, stop loss around 27,000, take profit 47,000. Along the way, you can just take off your profit along the way. That is for short term. So that's why when you come up with decision as a trader, right, you must talk about math, repeated patterns, a strategy. That way, whatever decision you make will be a calculated risk and reward. You won't fumble because of anything else. Okay, so I guess I already answered most of your the content over here. I guess it's time for me to talk about certain important Q&As that has been asked by you guys. So the first question will be by Tom. Do you believe in the top logarithmic regression band to be hit, considering that history doesn't have to repeat itself, and by definition that we are in a bear market considering Bitcoin drawdown from ETH? Yeah, that's exactly what I just explained, right? So history actually still repeats itself, because if you look back in time, whatever that's happening right now, which is the fourth crypto bull run, is a full replication of what happened in the second crypto bull run. It's exactly the same. And why do I think history will repeat itself for this time around? It's based on the fundamental of Bitcoin, the technicals of Bitcoin, whereby there are already 3 data points for the top of the regression band. All this and all, together with the fact that DeFi space is growing every day, the fact that a government has already used it as a legal tender, the fact that hedge fund Redalio, the biggest hedge fund, right, is so receptive of Bitcoin that say that he would rather invest in Bitcoin than anything else in the current market context. This gives me confidence that if Redalio were to say so, I believe other hedge funds will start to go in. The thing about hedge fund is, hedge fund approval process will take a lot of layers. It won't be something like, oh, today I want to buy Bitcoin, oh, let's buy. No such thing. Hedge fund will be, let's say this hedge fund say, Bitcoin seems to be a viable investment. At the point when they think it's a viable investment, it will take months and months, sometimes to half a year before they really buy into the Bitcoin. And when they buy into Bitcoin, they will hold them for decades. They hold them for long term. So meaning to say, the maturity of Bitcoin is never been felt before. With the inclusion of hedge fund, institution, the new floor will be such that it will be so difficult to push down Bitcoin, because there are big boys out there to set a new floor. Unlike back in the past over here, look at this. It dropped 75%. So I won't be surprised that this time round, instead of dropping 75%, will the most drop 50%, which we have already did in the midst of a bull run like this. This was the second bull run, okay? History still do repeat itself. So I hope I answered your question. What do you think about the trading gap on CUE, etc. futures formed by weekend volatility? Why does it work 90% of the time? What do you mean by that? Or CME futures, okay. Okay, the thing is, that is not how I trade in terms of covering the gap or whatever. But in terms of gap, right, there are a few things to bear in mind. I just give a... Actually, I never share this with any one of you or with other people before. I guess I have to share it. You know, in gaps, right, there are 4 different kind of gaps. The first gap will be insignificant gap. Meaning to say, if let's say the gap were to happen, let me look at a stock, maybe Tesla. There are 4 different kind of gaps. The thing about gap is, let's say the gap were to happen at a point whereby it's not high, not low, that gap doesn't mean anything. Look at this. This is a gap. It gap down, it gap down. But the position of this gap, right, is actually not at a high point or not at a low point or not breaking out from a structure. So this gap doesn't add any value in coming out with the conclusion, say, oh, this gap means that it will be covered 90% of the time or whatever. Although gap will be covered 90% of the time, it doesn't add value in your strategy. But let's say it's a gap that is when, after it do some kind of consolidation, it break out this first gap, right? Then this first gap is a sign of strength. So this is called the breakout gap. So for breakout gap, right, typically, right, it's a very bullish sign that no doubt at this point juncture, right, some people will say, oh, Tesla seems to be overpriced. But if you understand about the gap concept, the fact that it gap right after it do some kind of sideways consolidation during this price range, right, then that gap is actually a very bullish sign that we should buy Tesla regardless of how high, because the concept of high is very subjective. When it's high, it can go even higher. So the third kind of gap is the finale gap. Sorry, actually it's only three types of gap. Finale gap is where, let's say, it do a gap up. Let's say for this case, it do a gap up like this. Alright, there's a small little gap over here, but it's already at high point, and you only take less than 5 or 6 candles to cover the gap. Look at this. It covered the gap in 1, 2, 3, 4, 5, 6, 7. Okay, this 7, less than 10 candles, it covered the gap. For this case, right, it's actually very bearish in my honest opinion. So it's based on concept of where is the position of the gap to determine the bias of where it's heading to. Breakout gap, it's bullish. A gap whereby it's right in the middle, add no significance. A gap that is a finale gap whereby it's been covered in less than 10 candles is very bearish. So that is the basic concept of how gaps work. Other than that, whatever it is, we don't really care. So MACD, all this, take it with a pinch of salt. We should not rely on... In fact, most of the time when I look at charts, I look at just the candle patterns and I count the wave pattern based on Elliott wave. But Elliott wave is a bit hard for me to explain in words right now. Probably if I want to explain in words of Elliott wave, it will take at least few weeks. Because Elliott wave structure is a concept of counting the wave and decide whether the consolidation is done or what's the probability of things going down right now based on the fact that we at least have to fulfill 3 waves or things like this. But okay, your question about why you give that credibility and trust to Satoshi words. From what we know, he could be a group of person or even FBI, NSI, CNI, or George Soros. Okay, whatever Satoshi says, whether we give credibility of what he says, it's not really the importance. The importance is whatever he says, could be it a random guy that says something, as long as we do our self-verification, we know that it actually adds values in the financial statement, financial market, regardless of who it is. It doesn't change the fact that Bitcoin is the truest form of money we should have had since the beginning of time. It doesn't change the fact. Just like gold, why gold has been a form of currency back in ancient Egypt and all the way back to ancient Mesopotamia, millions years ago. Why is gold always the standard form of money? Because gold is finite, is stable. It will take a lot of resources to mine gold. It doesn't take away the property of Bitcoin regardless of whether we believe in Satoshi or not. The fact, it's not about we respect Satoshi or what. It's the fact that that white paper proved a point that it works. Okay? So when you really understand it deep down on the fundamental of why fiat currency is ultimately not the end game that we should rely on, because of crazy ass printing, you know fiat currency is not sustainable in the long run. You understand that Bitcoin is and should be the truest form of money, and regardless of who it is, even Satoshi is a group of gays, a group of lesbians, it doesn't matter. The main thing is the white paper itself is what that helps Bitcoin being so stable. The white paper, the rules that is being self-governed by itself, that make it very important. I guess I already explained a lot of things over here. Hopefully that will add some values in your understanding of how to trade Bitcoin in future, especially for short term and long term. So let's do a short recap over here. So in terms of recap, no doubt this is very bearish for Bitcoin, but if you are in a long-term journey of Bitcoin, this doesn't worry you at all, because ultimately we have yet to fulfill two things. The top of the regression band, this is number one. We have yet to fulfill the top of the regression band, this is number one. We have yet to reach at least the 7 trillion market cap, which is already a discounted value according to the regression curve that has over 100 data points that's being extrapolated on the data curve. For the bottom, for top point, I have 70% certainty that will at least respect, but with discount, that's the reason why I come up with a 7 trillion market cap. So that's number two. And the fact that the fundamentals that we have over here of all the big boys, institution, hedge fund getting in will set a new floor for Bitcoin, that will be number three, all the fundamentals that we have over Bitcoin. So all in all, for long term, buy, no stop loss, and wait for it to hit at least the top of regression band and sell it. Short term, a bit different, because short term, you will be the one to encounter noises along the way. For me, I don't really give a shit about short term trading for Bitcoin, because in the worst case scenario of things, you know, Bitcoin will do something like this. You'll do something like whipping. When it hits certain level, it go all the way down again. It hit 25,000, and when you think is very bearish, it will be the start of a long over bull rally. And even so, it is still in line with our schedule, right? It is still in line with our schedule that it will hit the top of the regression band somewhere in next year March, plus minus 2-3 months. Alright, it will still in accordance to our schedule over here. That's my estimation, because I kind of extrapolate based on the price action of how the third cycle, the fourth cycle, the second cycle, third cycle, and that's the reason why fourth cycle I think will be something like this. That's the reason why. Okay, I have give more than enough analysis of Bitcoin, so hopefully that will add some value and confidence of how you should trade short term and long-term Bitcoin. Long-term, don't give a shit. Whatever it does, no stop loss for Bitcoin. Hold it until the top of the regression band, and probably at the mid section regression band that is around like 95,000. 95,000 onwards, you can start liquidating your Bitcoin or set a trail. Because anything above $95,000 for Bitcoin, there's a chance that that is the data point for the top of the regression band, and you'll do a crazy ass 90% retracement. So that's the reason why only when it hit at least 95,000, then you start the trail. Aside from this, don't care, okay? But my ideal target for Bitcoin is actually, honestly, is around 100. My prediction is 140,000 for this peak, somewhere in March. Okay? Somewhere in March next year, the top of Bitcoin is around 140,000. But to be conservative, that's the reason why around 90,000 I will start taking some profits along the way and trail Bitcoin. Short term, I already given you an answer of how to do it. Buy now, stop loss 27,000, take profit 46,000. That is risking 1 unit to win 4 units. Is a good investment. Okay, floor right. Do you still play lots? Of course, I still play lots mobile. It's just that I'm very inactive right now. I'm more active towards trading, towards giving education content in eToro, be it on YouTube as well. So hopefully this short stream, actually it's not short, it's 1 hour, you'll add value in your understanding of Bitcoin, how the big boys manipulation works, how to trade Bitcoin in terms of long term and short term. Yep. Hope you enjoy the stream. And with that, I shall cut my stream. Wish you all the best in your trading career. And remember, you are in control of your whole life, your happiness, your sadness. So whatever it is, take control. Don't blame on anyone else. When you lose, when you don't understand something, review, research, self-verified. And that is how you improve yourself as a person and add value in your trading career. With that, I will end my stream. Take care, guys. Bye.